Immense volatility coming through on the local currency after hitting a 6-month low on Friday of 732. It's also interesting to note that we had reserves out a little earlier today. We're sitting on the gross reserves front, rising to $45.47 billion in Jan from $43.83 billion in December. Some would argue that the news that the central bank is in fact intervening to this extent should result in rand weakness. What can we attribute the rand's strength to this morning?
Good morning, Eleni. Well, just starting firstly with the reserves data, we've suspected for some time that the Reserve Bank has in fact has stepped up the pace of accumulation of reserves, and that was certainly borne out by today's data. We saw gross reserves jumping by over R1 billion, and certainly that's indication of some very aggressive buying by the SARB. We also saw increased use of longer dated FX swaps, and in addition we also saw the National Treasury depositing quite a sizable amount of dollars with the SARB in order to assist them in accumulating reserves. And this tag team approach, this relationship that they've developed, has certainly been increased, and they're coordinating the accumulation of reserves much better than they have in the past. However, going forward, the pace of reserve accumulation could decline because, amongst other things, foreign inflows into the South African market are drying up. As far as the rand's response, it's certainly curious that the rand didn't weaken substantially on this news, but then again, increased reserves are seen as being positive for the economy, and that could explain some of the rand's adverse or unexpected reaction to the news.
Nomvuyo, it's also interesting to note that there was also a revaluation effect when it came to reserves as well, and this was also what boosted those numbers. Dollar depreciation against the euro of 2.6% for January, and against the pound we're looking at a depreciation of 2.7%.
Yes, absolutely, Eleni. That certainly also came in. As you mentioned, the dollar depreciated quite significantly against some major currencies in January, and the revaluation effects thereof also helped to boost the overall reserves position. But this was also, that effect was partly counteracted by a decline in the gold price. So when you look at gold revaluation effects, that actually subtracted from the overall number. But I think what's important is that those two effects really paled in comparison with the amount of reserves that the Treasury bought and the amount that the amount that the National Treasury deposited with the SARB, and therefore the amount that the SARB actually bought in the month far outstripped the revaluation effects.
Also interesting to note, we're seeing a very big change, a transition perhaps from the tone that we saw from the Reserve Bank Governor in November to what we're seeing now. Looking at the price impact that we'll see because of the weaker currency, also given the fact that we're starting to see inflation pressures coming through, what do you think in terms of the interest rate environment? Could we perhaps see an interest rate hike towards the end of the year? We know many people have been talking about it, but also one needs to consider the fact that we're going to get that unemployment number later on this week, and if it's remaining above that 25% level, then perhaps a big focus also needs to be placed on that before we see a hike in interest rates.
Well, Eleni, if we just unpack those drivers that you talked of and look firstly at inflation, our core view is that inflation is going to trend higher over the year, partly because of some rand depreciation. As you mentioned, there are also rising global food prices as well as energy prices, and those could certainly have an impact on inflation. We saw that come out strongly in last week's PMI release. However, the economy is growing below trend, and we think that excess capacity is still going to have a dampening effect on prices. So from a purely inflation point of view, we don't think that is going to force the Reserve Bank into hiking rates anytime soon. However, it certainly is a mounting risk factor, and if there's some stronger inflationary pressure that comes through, we would certainly have to then consider an earlier than expected interest rate increase. If you're looking at employment, on the other hand, we have those numbers out tomorrow. We saw the unemployment rate tick up in Q3, and that also coincided with the moderation in growth. So at this point, we're expecting a stronger Q4 than we had in Q3 as far as growth is concerned, and that should then coincide with a slight decline in the unemployment rate. However, if that is not the case, then certainly it would not be in support of an additional rate hike, rather a rate cut, which we don't see at all in our forecast at this point.